Why is Uber so cheap in terms of the price to earning ratio? The PE is only 10.8x. If you look at Microsoft, it's at 32x, Google 32x, Apple 34x, Nvidia 46x, Tesla 304x. According to the PE, Uber is 30 times cheaper than Tesla. Is this a trap? What's up, homie? It's Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to HowieVerse, where investing is driven by data. In this video, I'll break down why Uber appears so cheap. There's definitely something going on, and we will explore it so that you don't have to fall into the trap that so many investors make. So let's get to it. Uber is currently trading at $84.85. And over here, I have gathered all the relevant data for you so you don't have to do it. However, if you want to do it yourself, you can verify all the numbers that I gather from Yahoo Finance. And also, I went to Uber Investor Relation page to get their Q3 number and also for the Q4 2024 so that you can get the trailing 12 months number. And lo and behold, everything is here. And the income is $16.6 billion. And the tax benefit encompass $10.3 billion. So that is a really big chunk. And after getting rid all of those, we got the true net profit is at $6.2 billion, right? Excluding the tax benefit that is fully elevated. So I just calculate the net percentage. Doesn't really matter with all of this, but I just want to show you the result because I don't want to go through the math in detail, but you can double check all of this. And the EPS is essentially at 7.96. That is including the tax benefit. Excluding the tax benefit is 3.01. And after we take that into consideration, without tax benefit, we got relatively the same number. I believe it was 10.8 that was reported in the website, but we got 10.66. We're pretty close, right? And then also for the PE without tax benefit is at 28 instead of 10.6 or 10.8. Uber adjusted net income and EPS were far lower, revealing that the stock was not truly trading at the ultra low PE multiples. In other words, what looks like a low 10x PE on 2025, earning was in reality closer to a growth stock multiple. For example, Google that we saw earlier was at 32.9 or something, right? So 33x. So service level financial can create distortion in the financial so that things that appear cheaper. So artificially compress PE multiples to near historic low, creating a fake cheap stock. So we really need to be careful with the things that is reported, and we want to get the number right so that we don't lose money on our investment, right? So if we accidentally buy cheap stock, in reality, when everything is accounted, it's no longer cheap like we see with Uber, where the actual PE without this tax benefit is 28x instead of 10. Okay, so we got Uber PE excluding the tax benefit is at 28x. Now back the question if Uber is still an investable company or is it still cheap at 28x? If we get the EPS that is excluded, the tax benefit was at 3.01. And then for the 2026 growth, you can go to Yahoo Finance where the analyst is making the case where on average estimate the next year EPS is 3.61. So if we take that into the calculation, we got the growth rate is about at 20%. When we get that growth rate at 20% and we calculate the PAC is PE per growth ratio. And if company is still growing in terms of revenue, in terms of earnings, we need to include the growth rate into the calculation to determine whether if the company is still cheap or not, right? Because if you only look at the PE and the PE could be elevated, for example, like Nvidia, the PE was like 40 something. And the reason why it's elevated because the company is still growing like a lot, right? When you calculate the PAC and taking that into the consideration, the PE might become like one, right? So P one, like around one, is like at fair value. Where I see Uber is at that range, and 1.4 is actually a really good number here for the pack. The next thing I want to talk about is my price target. So it's a price target within the 12 to 18 months. For the bear case is 82.50. 82.50 is a lot closer to the currently trading price at 84.85, right? And is actually really good because the thing is that from the bear case within the 12 to 18 months, it's nearly aligned to the current trading price already. And what's more likely to happen is the base case. The base case that I predicted is going to be $122. And this is what's likely going to happen according to two things that I will mention later in the video. Or the bull case is at $160. If you look at the price that's currently trading is at $84, right? And if all of a sudden for really rapid, it's taking from $84 to $120 within a year, then that might gathers momentum from the people that is FOMOing into the stock. If that happens, then it may get the stock all the way up to $160. And this is less likely to happen. However, for the base case, I believe within the 12 to 18 months, it might happen. And if we look at the Uber analysis by the price target analyst here, if I hover into this region, right, you see the high is 150, which is a lot closer to the price target that I was thinking about at $160. And the mean is at 110. To support my theory of $122 price target, this is just my theory, not financial advice. There are three things to support my thesis. First is share buyback. Uber has allocated $20 billion of active capital towards share buyback. Buyback is one of the tactics of a company can do to reward their investor. Uber was operated at loss or negative profit for many, many years before. Now, Uber starts making money. They would like to reward their investor for believing in the companies through buyback. The second thing is Uber is no longer a speculative tech company. Yes, it is still a growth company, but it's now a cash flow compounder. The third thing is Uber subscription. Uber One subscription is very, very sticky. For people who has Uber One, they tend to spend a lot more money in terms of dollar amount, even though they got huge discounts. All right. We talk about three good things that are happening to Uber. What about the downside? What about the autonomous vehicle? What about when Tesla figure out their full self-driving technology? What would happen to Uber then? This is a valid concern. Now, to my understanding, after reading everything about Uber and what the company does, is that Uber is not going to be impacted by the autonomous vehicle technology because Uber is just a platform for people to find each other, right? For example, the customer wants food, it will find a driver for you to take the food from the restaurant and drive it all the way to your house. So Uber do not own the drivers. Uber do not own the vehicles fleet. So that is not a risk for Uber to take. So it's just basically a platform. Arguably, if the autonomous fleet is happening out there in, let's say, 2 to 5 years from now, is going to increase the profit margin of Uber. If you think about it, right? Uber can essentially charge more if this autonomous fleet that has no drivers For the lack of better term, Uber doesn't have to pay the drivers if there is no drivers. It's just autonomous vehicle. And if they don't have to pay the drivers, that means Uber have a lot more profit margin, which is good for the company. And if the profit margin increase, most likely the stock price is going to increase. So overall, autonomous vehicle technology is a net positive effect for Uber. In conclusion, the story of Uber is really solid, and my price target was at $122. If you have a price target for Uber, considering comment down below. And also, if you like this video, subscribe. I'll see you next week.